to this episode on market structure. Today we'll be talking about market structure and a failed market structure. Want to know the characteristics? How can you trade the market structure break and a failed market structure? Now, the difference is this. First of all, let me make use of the whiteboard. I'll make use of the whiteboard. The difference is this. Now, this is a market structure, proper market structure, but we have a downtrend. Then the market did this. We have a breakout of market structure level. And we have it close above the market structure level at the confirmation of the main time frame. Then the market will start going back up, right? Now, this is a proper market structure. But in a situation whereby we have a failed market structure, this is it. Price came down, we have a downtrend. Then from there, price breaks through this particular market structure. But what happened? We saw price ranging or trading above the market structure level throughout the week or throughout the particular period of time. Then at the close of the main time frame confirmation, we have price closing below our level. This is a failed market structure. Why? Because at the close of the main time frame, look at this place. Price went back into the what? The moving average, the market structure region, giving us a what? A market structure field. Giving us a market structure field. A market structure field. That's what they gave us by having this particular place. So we now have a situation whereby there and here, this particular level are now a key level to watch out for. Because we now have a what? A market structure field. Now, this is the difference between a pure BMS and a failed BMS. Remember the F there means a failed BMS. Sorry. Now, we want to understand how to trade the failed BMS. Now, when the failed BMS failed totally, what we see is this. We are going to see something like this. Price is going to form this. All right. Sorry. Range, then drop. Then it will continue dropping. Continue the trend. Why? Because it's actually respecting a bigger time frame scenario here. But in this situation whereby the market has already bottomed out, what we are going to see is going to be different in the sense that we are going to see something like this. The market is going to come up. Remember, this is the zone, the field. Then go back into the resistance field. Then come down around this level here. Let's say 75% retracement. Around this level, form another what? Entry pattern, then it will go back up. Now, what we want to do is this. If this is listing now, this is where the time frame sequence come into play. This is the 4 hours. That means we are working with the weekly time frame, main time frame, 4 hours primary, and of course, the 30 minutes entry. If this is the 4 hours, what we want to look at is this. When price keeps on going higher like this, towards the field of this particular market structure, we want to see a break in the market structure between the 30 minutes and the 40 minutes, 4 hours, for us to signify it's going to go back down. But if there is no break in market structure around this wave, this last wave, this market structure wave, then the market is going to go up and shoot. It's going to go up and it's going to shoot up. Let me bring it again. This is what happened here. We have the break in the market structure. Now, what happened is this. This is the 4 hour time frame. At the end of the week, market closed below. Now, on Monday, the next week, they are going to drop price lower, lower around this region. Then they will change their hand. In changing their hand, sometimes they can give us a stopping volume bar. Then they go up. Now, in ascending up, remember, this is going to be the first target. What they are going to do is this. If they are going to break this market structure and continue the reversal, they are going to form other blocks here in 4 hours or a range. But what is going to differentiate them is this. In the 30 minutes, there will be no what? Break in the market structure for a sale from the 30 minutes time frame. Instead, what we are going to have is the order block and the retest, then price is going to shoot up. That is what we are going to have. For example, in this particular case, this is the gray between USD weekly time frame chart. We have the 4 hours and the weekly time frame. Price drop formed our market structure region. Drops from our market structure region around here. Then what happened? At the end of the week, it went above to give us our weekly time frame. Okay, now let's go to the daily time frame. Yeah, the daily time frame has the daily. Let's check the daily. Now, this is the daily time frame. The daily, do we have it in the daily time frame? Okay. We don't have a field this thing here. And where can we get a failed break in the market structure? Trying to see. Okay, let's see if we can have it here. The 4 hours. All right, if you look at this, we have a break in the market structure. This is the market structure region. This is the market structure here. The market structure, giving us like a head and shoulder pattern. Now, at the end of the week, look at it. At the end of the week, this is what happened. Price still went back below to close around this region. To close around this region. So close around this region, yeah. Price close around this region. Now, what happened? If you noticed, we saw what? A move back up. Price dropped down to this place, and we started going higher. If you go down to your 30 minutes time frame and check this particular wave, because they did what? They went high, they dropped it back, then they took this last wave, this particular wave at the 30 minutes time frame. At the 30 minutes time frame, if you look at the wave, you will notice something. There was never a break in the market structure level. This is the best market structure. There is no break. The price did not come down to that level. There is no break here. There is no break of market structure region here. Neither is there a break here. This break, let me see. Okay, there is no break because it did not go above. So there is no break. This is actually the market structure level here we are supposed to work on. This particular low. There is no break, and price went up, shoot up, then it keeps on going higher. We penetrate the what? We penetrate this region. There was no break. It was very heavy here. Then price went above, and we have a what? A change in trend. That is an example of a typical example of what? Of how to trade the failed break in the market structure of any trade. This is a failed break in market structure, how to trade it. So that is it. And of course, we all know how to trade a break in market structure. That one, I don't need to talk more about it. So that is it on a failed break in market structure and a break in market structure.